One more break and then we're going to wrap the show up. I want to talk about children and grandchildren, and then we're going to talk about your book, because for those folks out there, this is a must-read book, or work with an advisor. Give your advisor a copy of this book if you're not going to get a. They got to join you, Ed. They got to join the Master Elite status. If you have a question about today's show, please do us a favor. Go ahead and either drop it in the notes, email our office, go to our website. But I have a feeling today's show, and I almost mentioned the name to give away our guest. I want to do this big build-up, so I'm not going to say the name yet. But I think today's show is probably going to be our number one question show that we have out there, because we're going to cover a lot of stuff. And the expert, the guru that we have on today's show, has got a ton of books that are out there, and one that just came out a few months ago that is really opening people's eyes to what's going on out there in the tax world. So with all of that being said, I'm not going to do a name here for those of you listening. For those of you watching, you probably already know who we're talking to, but for those of you listening, we have a nationally recognized IRA distribution expert, speaker, television personality, best-selling author. And I really like to say, like, the number one, the guy, if you will, when it comes to talking about IRAs and qualified accounts. The Wall Street Journal deemed him to be the best source for IRA advice. And again, if you're watching online on YouTube, you've probably seen his face, because he's been in over 10 million homes across the United States, raised over $65 million for public television specials. So without further ado, the founder and the CEO of Ed Slott and Company, Mr. Ed Slott himself. Ed, welcome to the show.
Well, great to be here. You know, Mike, you took away my secret weapon. You know what that is?
What's that?
Low expectations.
I got you all the way at the top, so we got to deliver to the people listening.
You know, I heard you mention about your website. I was looking on there before, and I noticed you do a lot of your educational programs at the Toasted Oak Grill. I've been there many times. That place is fantastic. That's the little place in the hotel.
It is.
Surrounded by all the wine bottles, right?
It's exactly right. Yes, we do them there. Because we're doing a lot of things that, like, we're going to talk about today with taxes. And every time, again, you and I were talking off air, it's the ultimate job security of what we have, right? It's like, as soon as the taxes get figured out, they change them. And what I really love about what you're doing is it's all on the educational side. And so I wanted to kind of give our viewers out there and our listeners out there a better understanding of where your career path came from, because I've heard it before. I've been, in the Master Elite stuff that we do together. But tell the people out there listening your career path and where your passion has come from to lead you to this point today.
Well, I have to give you about 30 years and 30 seconds. But basically, I'm a CPA. I had a CPA, a regular accounting practice, for over 40 years. I just gave that up a few years ago. But as an accountant doing tax returns for clients for years, I saw this as a problem going back 30, almost 40 years already. When, remember, everybody focused back in the late 70s, early 80s on putting money into retirement accounts. Then 401ks came along, and everybody focused on building and building. And nobody ever thought that, hey, one day this money has to come out. So I made a big, bold prediction over 30 years ago. And here was my big, bold prediction, that in 30 years, anybody alive would be 30 years older. That was my big prediction, and it panned out. Yeah, people will actually retire and need to get at this money without getting clobbered with taxes. And I realized there was a gaping hole. Nobody was teaching anything about that. Managing the taxes on what you get to take out of your IRAs and 401ks. Everybody was talking about building and building, but you can't spend what you can't keep. When it comes to your IRAs and 401ks, it's what you keep after taxes that count. I don't care how much you make. You can make 30% a year for 30 years. If you give it all back to Uncle Sam, what have you done? You built a savings account for the government. And I don't know if you know this, you don't really have to share all that with Uncle Sam. He's not even your real uncle, okay?
Hey, I always love when you say that, every person out there with a 401k has a silent partner. They just don't know about him, right?
Yeah, I also talk about the IRA being a joint account with Uncle Sam. Think about it that way. It's not all yours till you do something about it. That's why, back to those seminars, I love you do those programs at the Toasted Oak, because when you hear about the tax bill, you need a lot of wine around you.
It is, and it's overwhelming, and with what they're coming about, you're right. And it's scary stuff that's out there. And you know, I love that you said that, because so many people focus on accumulating, and that is important. But to your point, if you're giving back everything that you're accumulating, what are you really, your work? It's like you're working for free. How many people right now want to go to work and then every Friday you get no paycheck?
Well, you get a paycheck, you just have to give it over to the government because you didn't do anything. And that's why I always say, been saying it for 30 years, you heard me say it on public television, especially in the Detroit area. That's the hotel. That's why I'm there so much.
I know.
That's the hotel they put me up at every time I do Detroit public television. But I've been saying it for years. You want your plan, not the government plan. So when I say that, some people ask me, Ed, what's the government plan? I say, oh, that's easy. Doing absolutely nothing and letting it all happen to you, or having an advisor that's not trained in the tax planning. That's why you take the training. That puts you probably, in my estimation, probably in the top 1% of advisors, because I believe 99% of advisors, they can help you make money, but that's not good enough when it comes to your retirement account. You have to have a plan to keep it as well.
Well, I know that we are talked about this in our office. It's a big deal, but we are independent advisors, and I want you to kind of share with the listeners out there from your non-biased tax point of view, right? When the listeners out there are looking for an advisor, what should they be looking for in a retirement advisor or a financial advisor in this second stage of their life?
Well, it's not just, there's two parts. I always say that retirement planning is like a football game. The football game has two halves, and there's a saying in football, and sorry to say, have the Detroit Lions ever won a Super Bowl?
Hey, you know what? I thought that when you said that you were going to give us your prediction, the Lions would never win a Super Bowl. Now, you would have been right on that one, okay? We have never won the Super Bowl.
All right,
ever.
Forget the Lions. Look, I have to do something because my two teams in New York stink. You know how I enjoy football, Mike? I root for other teams to lose. That's the only way. Anyway, there's a saying in football, the score at halftime is irrelevant. Give me the score at the end of the game, and then I'll tell you who won. You have to play both halves. How many games, pro, even college games, are won sometimes in the last 3 to 5 seconds? You notice that? Right
Yes.
at the end. So retirement is like football. It has two halves. Here's the mistake most people make. They don't play in the second half of the game because their advisor is not trained to do it. So most people, take the people who spent 30, 40 years building, saving, investing, sacrificing, and now they come to halftime, retirement, and they look at their account and they say, wow, we've got all the money we'll ever need for retirement. They pat themselves on the back, they go in at halftime, and they're done. Meanwhile, the IRS comes out, they're playing the third and fourth quarter, they're playing nobody, so they win. You need an advisor that's trained to play, to coach you, to help you get through the third and fourth quarter to win the game. The average advisor may do well helping you make money, but that's not enough. So you need an advisor that has the training like you do, Mike, and our other elite advisors around the country. That's why I created this specialized education program for advisors that want to play all the way through because they want their clients to keep more of their hard-earned money.
Most people don't show up in the second half in their financial planning because they're only worried about accumulating, but nobody's talking about distribution. So I know this is a tough question, but if we can address this, how can people get taxes to work for them in retirement?
All right, I'm going to give you the secret to the book. You know how some of these books you read out there, they give you the secret, or they tell you the secrets at the end of the book, or they never tell you the secret. You have to figure it out for yourself. The secret, remember, when you're talking about IRAs and 401ks, you have to understand they're loaded with taxes. That's why I call my book The New Retirement Savings Time Bomb. The taxes in these retirement accounts, if they're ignored, are a ticking tax time bomb. Say that 3 times fast. A ticking tax time bomb ready to go off at the worst possible time. in retirement, when you're going to need the money the most, when you're the most vulnerable, when the paychecks have stopped. And now you're at the mercy of whatever the future, what I think will be higher tax rates are. So you have to play for the second half of the game, but that has to be done immediately while you're planning now. So you have to understand that the accounts that you're counting on, that most people are counting on for retirement, are tax deferred, not tax free. There's a big difference.
Huge difference.
Tax deferred means you won't pay taxes on that money yet, but you will at some future date, and probably on a higher balance and probably at a higher rate, leaving you less when you need it most. Tax free means you'll never pay taxes on that money. That's where you want to end up. So the secret is moving from forever tax to never tax, making the tax law and the tax code work for you rather than against you. And most people can do it, but most people don't, because they don't understand how the secret works. And I'm going to tell you, it's all about the taxes. The foundational principle of keeping more of your hard-earned money, and this can save you tens of thousands, in some cases hundreds of thousands, more in your pocket, is to always, this sounds simple, but most people don't do it, always pay taxes at the lowest rates. Yes. Get that money out at the lowest possible cost. And that may mean now. So the secret to the book, to get rid of that growing, building, compounding debt in your IRA by paying some of the taxes now. So people might say to me, Ed, that's the big secret, pay taxes now? Yes, get rid of it. It's like paying off a mortgage, a noose around the neck of your retirement savings. Get it out now while rates are low. And the minute you do that, you get something for your money. You get tax freedom, the ability, the minute that those funds, for example, with a Roth conversion is one way to do it, I mentioned in the book. The minute you do that, now everything you earn grows for you 100% tax free. You're no longer sharing with Uncle Sam. You're keeping every dollar. And that's how you compound. Long term, you'll have more, you'll keep more, and it will last longer because it will be tax free. So that's the secret. Move from forever tax to never tax. There's a cost for that, but sure, the sooner you eat that cost, the more you will have later.
Well, I think it's so important. You know, I love to tell the client, control the controllables, right?
Right.
And again, we could probably spend a whole show just talking about where you and I think we're on the same page. Where are taxes going to go in the future, more likely, right? I mean, you and I aren't going to be the ones signing those bills to make that happen, but it's more likely to see an increase. So control the controllables, right? And do the Roth conversions, do some of these other tax planning strategies today, right? I can't go back and, hey, when you signed your employment documents 30 years ago, change it, right? No, we can't go backwards, but moving forward, control your controllables, because pay the taxes at its lowest point. Everybody wants their money to do the same thing, right? They all want it to move in one direction, up, up, up. Do you want that to grow taxable or, to your point, tax-free? So phenomenal point there. Now, here's something that you probably already know, but there are over 47 million IRA search results when you type in Roth IRA. So if you go into just to Google and you type in Roth IRA, right? 47.7 million search results for a Roth IRA, solidifying that this is a huge topic for people, right? And so can you please inform our listeners out there about why the Roth IRA is so important in today's times?
All right. You pay is the easiest way. You pay tax once and then never again. Then it's tax-free for you for the rest of your life. Another way I explain it might even make more of a point. I call Roth IRAs tax insurance. You're insuring against the uncertainty of what future higher taxes can do to your retirement savings. You insure everything else of value in your life. Why not insure your retirement savings? And a Roth is a one way to do it. So I call it tax insurance, because if tax rates go up, you're covered. In fact, if tax rates go up, your Roth IRA funds become worth even more, because anything tax-free becomes immediately more valuable when tax rates increase.
You're so right. Gosh, I'm going to be using that one, tax insurance, because
yeah,
look, it'd be like if I came to a listener right now and said, look, we will be able to tell you right now that your insurance for your home and your automobiles will never increase for the rest of your life.
Right.
How many people would say, sign me up?
Right.
right? Sign me
You're
up.
insuring against Congress having their way with your retirement savings.
Well, and again, we get to do a whole show just on the Secure Act 2.0 and the craziness that they're talking about out there now with
Right.
all of these things that are happening. So, look, I wish we had time to get into that because that's a whole segment in its own. It's coming. It's coming. And, to your book's point, right? This is a savings time bomb. Like this is, and the bigger you build your bomb, the bigger and the bigger the what? The explosion's going to be. So. Should people really look at an all or nothing approach to a Roth, or
well, no, that's where they need
Mike.
That's where they need an advisor that's trained, somebody like you and our other advisors around the country. When I say our other advisors, I don't sell any stocks, bonds, funds, insurance, annuity, none of that. I'm a tax advisor, and our business is training advisors who want to learn these specialized skills. Michael is one of them, one of about 400 around the country. Now, you would think, wouldn't every advisor want to have that kind of specialized skill?
Yeah, when you say 400, I'm thinking like there should be like 400,000.
Right, but there aren't. So that's the thing. You have to find your own customized area, because just on the Roth conversion, for example, you want to talk to an advisor that can guide you and project what the tax might be. Probably the best solution is going to be somewhere in moderation, where you do a series of smaller annual conversions over time, taking advantage of the lower tax brackets each year.
That's exactly what we're telling our clients, and I say that in all those presentations that we're doing, I will very specifically say, folks, I am telling you right now, do not do it all at once unless you consult somebody. Very, very rarely does it ever make sense to take all of it and just dump it in there, right? So you have to do it strategic. And the thing is that we've learned in our office, as soon as it's not like it's a one size fits all. You can't put the same shoe on next year. You can't do the exact same conversion amount next year because so many things change year to year to year.
You don't know what future tax rates are, and you know them now. I was just speaking with an older client of mine from years ago, and she did go all in, converted millions, because she wanted to lock in today's rates, even at today's top rate. She's a high income taxpayer. She felt even 37% is less than I'll ever pay in the future. And she was doing the Roth conversion, not for her, but for her grandchildren and grandchildren.
This is, in my opinion, the most important thing in somebody's creation of their wealth, or even for themselves, or to what we were talking about before break, children and grandchildren. I had a client just in the other day. He's like, yeah, I'm really excited to be doing this for my daughter. He had one daughter. And I said, well, I'm really excited to be doing it for your wife, because the wife was 6 years younger and more likely, right? She's gonna outlive him. I said, I'm excited to do this for your wife. And he looked at me kind of funny. I said, why? I said, because did you ever look at the tax brackets when you go from married to single?
Right.
That's a huge deal. So share with the people out there, why is it so important that if you are the IRA owner today, or a beneficiary of an IRA, why is it so important that this planning gets done before the death?
Before, what'd you say, the death?
Before they pass away.
Oh, well, obviously, the planning, you want to create tax-free vehicles that grow tax-free for your beneficiaries. But the thing you mentioned, I called the widow's penalty in my book. That's a situation where people are under the misconception, because it's out there everywhere. Everybody feels they'll be in a lower bracket in retirement. You talk to any married couple, yeah, we'll be in a lower bracket, so we don't have to worry about taxes. Meanwhile, let's say the husband dies first and he leaves everything to his wife. Most couples leave everything to each other. That's normal. Now, the wife has, other than the Social Security differential, has essentially the same income that they both had when they were together, except now her tax rates skyrocket because she files single. Now, everything changes. So you want to create that tax-free vehicle, whether it's Roth. Another solution I have in my book is a life insurance, a permanent life insurance solution. Some people call it a super Roth. Same idea, moving from forever tax to never tax. You want to be in tax-free territory as a buffer to insulate you what was more likely going to be much higher rates in the future, even if you don't think so. And the thing I like about moving from forever tax to never tax, let's say I'm wrong about everything, that tax rates don't go higher. I don't think so. And they certainly are not going to go lower. I don't think so either. But let's say I'm wrong about everything. Let's say you went all in on the Roth and it turns out I was wrong. here's the consolation prize, which is why I love the Roth. You've just locked in a 0% tax rate for the rest of your life. That's not a bad consolation prize. You can't beat a 0% tax rate. That's the worst case scenario.
I love it. And I smile. For those of you out there, listening, you can't see the smile, because that's exactly what we're doing with our clients. And we go through and we show them that, hey, when you do these conversions, and, I love to be able to show the client, like, you have an RMD problem. And they're like, well, what do you mean? I said, do you know when you get to be like 80 years old, you are forced to take out more money than your income plan actually is required. So now you're taking out more money. You're not going to spend it because you were a saver your whole life. Now, what are you going to do with that money? You're going to reinvest it. And when you reinvest your money, what happens? Tax, right? That just keeps coming and keeps coming. So, as we start to wrap up the show here, and I appreciate your time and sharing all this information. And for those of you out there listening, Ed's book that's been out for a few months now is a must read. It's The New Retirement Savings Time Bomb. And again, this is America's IRA expert, Ed Slott. So for those of you out there, we have plenty of copies in our office. If you want a copy, call our office. Love to get you one. And I know they're available everywhere I've ever been, any bookstore, online, they're there. So make sure you get a copy. And heck, even if it's for yourself or if your advisor's not an IRA Master Elite member, like there's only I'm one of 400 in the entire country. Maybe share this with them and let them help you, or call us or someone else that can help you, because this second half of your retirement life, there are no do-overs. You can't go back and say, well, I should have, right? I wish I would have did that Roth. You can't. Right?
That what you said is the key right there, Mike. You asked me at the beginning when we started, how do I get into this? How did I get into this? And it was the whole woulda, coulda, shoulda. You just hit it perfectly. Clients would come in for their taxes and I would say, oh, you know what you should have did? You know what you could have done? And it was bothering me, this woulda, coulda, shoulda, that's looking back. Most people that do taxes most CPAs, my own profession, sorry to say, are just history teachers. They just tell you what already happened. And that's what hit me, the epiphany I had over 30 years ago. I don't want people coming in with this woulda, coulda, shoulda every year. I want to tell them what's going to happen. Where the puck is going to be, using the great Gretzky's saying.
Yes, and that's exactly it, right? It's and I tell people this, I will not do any taxes. We don't do any tax preparation in our office, but we do tax planning into the future, right? And that to me is more important, because again, it's a history lesson. I can go data input of what you did last year, but I'm more important about what's going to happen this year, next year, 5 years, 10 years, how about 20 years from now when we start talking about legacy and leaving money, because most people we're talking to, there's going to be something left. Some want to maximize it. Some want to say, hey, what's left is left. That's fine. I just want to minimize the taxes or eliminate them of what you're going to be leaving. So, Ed, as we wrap up the show here, will you share with the listeners out there things that they should be paying attention to in the coming months or years? Because we hinted on this a little bit, of things that are coming down the pipeline. What should be the listeners out there looking for and being aware of as we move on here?
Well, they should be looking at how much they have in IRAs and 401ks, and understand that money has not yet been taxed, and it will be. How much will that cost them when they need it the most? Now is the time to make some of these moves, or at least get a consultation from somebody that knows what they're doing in this area, like our trained advisors, like somebody like you and our other members of our elite advisor group who take this specialized education in tax distribution planning for these retirement accounts. You have to address this now, because now we know, you talked about Mike, about controlling things that you can control. Now we know what the rates are. We know what it might cost to move to tax-free territory. The future is unknown, but we can prepare for it by moving from forever tax slowly, or maybe in big chunks, from forever tax to never tax. But you've got to address the future. It's what you keep at the end of the game that counts.
It's the score at the end, the final score, not the halftime, right? Again,
right.
We had talked a lot about, hey, the Lions, we're more of a second half team, but sometimes they forget to show up. But that's exactly, in retirement, it's you have to show up in the second half, right?
But you have to plan for it in the first half. That's the key. You can't just wake up in the second half and say, we don't have any players.
Hurry, get on the field, right? Well, listen, Ed, thank you so much for your time. Any closing words, maybe one piece of advice that you would like to give the listeners out there that they should be doing to better themselves in the future?
Address this situation now. Get an advisor to go through it. And most important, check beneficiary forms. That's probably the number one mistake. As you know, Mike, from our training, right? We beat you over the head with that. That's the first thing you learn the first day in our training. Check beneficiary forms. We've seen so many plans go awry because everybody thought someone else took care of it. The accountant thought the attorney took care of it. The attorney thought the financial advisor took care of it. The financial advisor thought the cat took care of it. Nobody took care of it.
Yes.
Go to an advisor that understands these things and can take care of it. Every plan has got to be customized. One thing I've learned, there's no cookie cutter, no boilerplate for this, because everybody's family and financial facts and circumstances are special to them.
I love that you said that, and you're exactly right. And we've implemented that in our office. Every time we meet with a client, if it's annual, quarter, heck, if they come in 1 month or the next, we will literally give them a copy of their Benny form and say, has anything changed? Does anything need to be updated? The majority of the time, to your point, it's no, everything's the same. But guess what? I put my head on the pillow at night knowing that everything is taken care of, because you can't change it once it's done. So Ed, I thank you so much. I know we could probably talk for another hour or two about all the craziness going on. Folks out there listening, make sure you pick up Ed's new book, The New Retirement Savings Time Bomb. Ed, thank you so much. Be well and continue to spread the knowledge out there to all the people.
All right, maybe one day I'll see you out there in Novi.
Yeah, I'll see you in Toast.
I even know the story, number 6.
Thanks, Ed.